Hello, in this presentation we're going to record an invoice for a pre-ordered item within QuickBooks Pro 2018. The scenario being that there has been a purchase order that has been put in place specifically for a guitar that was intended for a specific customer. That guitar has now been in place, we have the guitar, and now we are creating the invoice related to that pre-ordered item, that pre-ordered item of inventory. In this case, in our case, that inventory being a pre-ordered guitar. If you've been working along with us, we will be continuing with the Get Great Guitars problem. If not, that is okay. We will still work the scenario, that scenario being that we're going to create an invoice as we have in the past, but this invoice being a bit different because we will issue it to a customer who has pre-ordered. So we've already have an order that was put in place. We actually purchased this piece of inventory specifically for a specific customer. Hello, in this presentation we will be issuing an invoice for a pre-ordered inventory item within QuickBooks Pro 2018. The scenario being that we had a customer, the customer wanting a guitar. We sell guitars. We did not have the specific guitar in the shop and therefore placed an order with our vendor specifically for this guitar for this customer. That guitar, once received, now needs an invoice to be processed for that, and we're going to link up the invoice with the purchase order with the pre-ordered item of inventory as we create the invoice. If you've been working along with us, we will be continuing with the Get Great Guitars problem. If not, that's okay. We're still going to go through the same scenario so you can see how this scenario will be set up. If you have a backup file related to this part of the problem, you can restore that by going to File and Open Restore and restore that. We will be entering data, so therefore, if there's an error that happened in the past or we haven't been following along in the past, then the backup files could really get you right to where we need to be to follow along with us at this point in time. Going forward at the end of this problem, hopefully we end up at the same place in terms of the data we are entering within the system. Also note that we have the open windows open over here. That done by going to View, Open Windows. We are currently in the Home tab, only open window open. If that is not open on your system, go to Company and Home tab. Now, we're going to be working with creating an invoice. We've done this in the past. However, we have a bit of a twist this time in that we're going to create an invoice for a customer who had pre-ordered, meaning the customer pre-ordered. When that happened, we didn't have the inventory at the store, and therefore we're going to order it from a vendor specifically for the customer. We did that with a purchase order. So remember, the purchase order is going to our vendor, ordering a guitar for us. However, within the purchase order, we're going to list for our records that this particular purchase order is related to a piece of inventory we need for a specific customer. And therefore, when we ring up the customer on the invoice, at the point in time that we're ready to give the guitar over to the customer, it will pull that information over directly. So let's see that. If we go into the purchase order here, I'm going to go back to prior purchase orders, and I'm looking for Eric Music in the customer. So this one went to a specific customer, but not what we're looking for. Here's Eric Music right here. That's in the customer field, not a required field for the purchase order. We may have been purchasing just in order to stock the store, but in this case we purchased directly for a customer, that being Eric Music. We've actually received this guitar now from the vendor, which is indicated here, our vendor being Epiphone. So we got an order from Eric Guitar. We went to Epiphone, our vendor, gave a purchase order, said we need this guitar. They shipped the guitar. We have now received it, indicated here. Now we can give it to the customer. At the point in time that we give it to the customer, that's when we need to record the sale and the inventory. That's when our job has been done. That's done with an invoice. That's what we're doing now. We're going to close this out. We're going to go back over here to the invoice and record this invoice. So we're going to click on the invoice. And then we have the customer field. We're just going to type in. We could see the drop down, but I'm going to type it in there. We're typing in ER, and then we see the customer we're looking for. We're going to select tab. Once we select tab, this screen should pop up. This screen says, the customer or job you've selected has outstanding billable time and or costs Do you want to 1. Select the outstanding billable time and cost to add to the invoice, or 2. Exclude outstanding billable time and cost at this time. You may add this later by clicking the Add Time Cost button at the top of the invoice. So we're going to say, okay, we do want to select that we're going to select the outstanding billable time. When we say okay, this screen pops up and we may say, there's nothing there. What happened? Remember that there's tabs here, or note that there's tabs up top. So there's nothing in the time tab. That would be related to service items. Nothing in the expenses, mileage. There is something, however, in the items tab, the inventory items. Remember, items basically means, in this context, inventory items. And there's the inventory item we're looking for. It was created from that purchase order that we were looking at. It gives us the epiphone, the quantity, the amount, the rate. And we can go ahead and click that in terms of the check mark, and then OK, and it should populate our invoice for us. So if we tab through this, then we've got the date. We're going to keep that date. The invoice is the 3rd. The bill 2 has the name, not the address. We hadn't populated the address. The PO number, the terms. We're going to keep the terms here. Actually, we can put terms here. We're going to say net 30 on the terms, due in 30 days. And then we're going to say it's the ELP. This was generated from the purchase order that had then been received. The invoice now indicating that we're going to deliver the guitar. That's typically the point in time that we have the invoice when the work is done. We've got one of the epiphones and the rate is 500. Note that we also have the sales tax down here, 5%. That was drawn by us putting in the items for the specific state. It will change from state to state. Therefore, the amount due, $525. Remember, what is not here? What is not here is the cost. But QuickBooks does know the cost and will record the cost. How does it know the cost? We have it in the lists. So in the lists, in the item list, we're looking for an Epiphone Les Paul. So if we go to the Epiphone right there, and then I'm going to go ahead and edit that. Edit item. And we will then see that item. The cost is $400. The sales price is $500. So when we record this invoice, we're going to close this out. Going to close this out. We're back in the invoice. When we enter this invoice, we'll see the sales should go up by 500. The accounts receivable should go up by 525. We should have sales tax of the 25, and then we should have the cost of goods sold going up by 400, and we should have the inventory going down by 400. So we'll take a look at that. The key point, the difference here from this transaction than the last time we looked at the invoice, however, is this connection from the purchase order now populating at this point. We're going to say save and close, and I'm going to say you have marked this. We're not going to email it. I've got it marked for email. I'm going to unmark the email, and then save and close, and say okay. And then we're going to go to our reports and just check this out. So we've got the reports. We're going to go to company and financial. Look first at the balance sheets. So balance sheet items. I'm going to change the date to 12/31/21. We're working in 2021. I'm also going to change the date range by going up to customize report. And then changing this from 01/01/21 to 12/31/21. And then OK. Now when we drill down on anything, when we zoom on anything, we'll have a date range in our transaction report. Let's take a look at that. Within the receivable, we would expect the receivable to go up from this transaction. I'm going to double click on that. We see the receivable here has gone up by that 525, double clicking on it. We see the 500 for sales, but that 25 in the sales tax, meaning they owe us, the customer owes us, Eric Music owes us $525. Closing this back out, we saw that the other side of that, if we have the sales side of it, the other side of it is sales. If we have the receivable, the other side is sales. So if we go to reports, that sales being on the income statement or profit or loss, we're going to go to company and financial, and then take a look at the profit and loss standard. change the dates 01/01/21 to 12/31/21. And then within the merchandise sales, we should see this sale if we double click on it. We see there's our 500 sale that we made. The other side of it to accounts receivable, double clicking on it or zooming in it, we see the invoice that has been created. Note that the sales amount, however, is only for 500 and we had 525. The difference being the sales tax. Closing back out of here. There's the 500. Where's the 25? We will go back to the balance sheet. Look for that 25 in the liability. It should be in the sales tax payable. Sales tax payable. We're going to double click on sales tax payable. And there's the 25 right there. We owe it to the state. We need to write a check to the state. If we double click on that item, we get our same invoice. Also note that inventory should have gone down. So if we went to the asset of inventory, merchandise inventory, and take a look at the activity there, we should see it decreasing. So if I'm going to scroll back up, we have inventory asset. I'm going to double click on that item and see that we have the 400. Notice it went down by 400. We had not seen that on the sales on the invoice. However, this invoice is what created this 400 due to the items that we used in it. If we double click on it, there is the 500 sales price. We don't see the 400 at all. We had to go back to the list items, the inventory items, and look at the detail to see where that 400 was coming from. So just remember that this other piece of it will be recorded as we go through this. The other side to that, on the income statement, on the profit and loss, it's going to be under the cost of goods sold. Here's cost of goods sold. Double clicking on that, we see the other side of that 400 right there. Double clicking on that, we get back to the invoice. So note there's a lot going on within an invoice. When we record the invoice, there's a lot going on. If we're selling merchandise, we have to deal with the sales side, we've got to deal with the sales tax, and we have to deal with the inventory going down and the related cost of goods sold. We're going to do this one more time, so I'm going to close this out. And we've got another customer. We'll keep the profit and loss and balance sheet open. We're going to go back to the home tab. And we've got another customer. This is going to be a music stuff store, and we're going to invoice them for, again, a purchase order that was pre-ordered that we have now received. Now we're delivering the guitar to the client, and at that point, that's when we earn the revenue. That's when we record the invoice, which records the revenue earned. So I'm going to go back up here, purchase order, just to check out this purchase order that's going to help us create this. It is going to be here, music store stuff. We made this purchase order directly for this particular client, saying, hey, Gibson, this our vendor, we need this particular guitar. They're going to give us the guitar in our system. We're going to say this guitar specifically for this specific customer. Thereby, when we get the guitar, we can create the invoice when we're ready to deliver the guitar. And we can put in the invoice this data that we're getting from the purchase order directly by linking them. Closing this back out, we'll then go to the invoice and do that process. Invoice, we're going to type in then the customer. We could select the drop down, but we're just going to type in the music stuff store and then select tab. And it's going to give us that same message. This customer or job you selected has outstanding billable time and or costs. Do you want to select the outstanding billable time and cost to add to this invoice? We're going to select yes, we would, and say okay. And then it's going to say these are the tabs we have. Now it defaults to time as if we're invoicing time. Nothing's there. Nothing's in the expenses, nothing's in the mileage. We're looking for the item. Remember, items in this context, in most contexts, is an inventory item. So we're going to check that inventory item. That's the one we want, the Gibson SG. We're going to say OK. And then it will populate. Let's tab through this and see if it does what we think it should do. So there's our date. We're going to keep that date. Invoice is going to be automatically generated. Should be correct. There is our billable to. We're not going to add the address. We got the terms. I'm actually going to add the terms here once again and put net 30 due and then 30 days. We've got the item. the GSB, which is, we want one of those. It's a Gibson SG, rate 777.4. Again, if we want to know what the cost was, we'd have to go to lists and we'd have to go to item list. We want the Gibson SG here, then items, then edit item, and that'll give us what the cost was, which is this $598. We will see that $598 in cost of goods sold in the reduction of inventory as we record the invoice. Closing this back out, closing this back out. We then see that item there. We see the total, and we see that it is taxed. Therefore, the tax at 5% of the 777.4 gives us $38.87. Total amount then $816.27. Once we record that, this is what's going to happen. This invoice shows that we basically are delivering the guitar at that point in time. And at that point in time, we have earned the revenue. Therefore, accounts receivable is going to go up. We haven't gotten cash yet. Receivable is going to go up. We're going to credit the sales or increase the sales, but only increasing the sales for 777.4 when the receivable goes up by 816.27. The difference being the 38.87 in sales tax. That's going to go into a payable that we owe the state. Then we've got the merchandise that's going to have to go down, not by any number we see here, but by the number we just saw when we looked at the list. And we're going to have the cost of goods sold, the expense related to this selling of this asset, this inventory asset, would be also affected, the cost of goods sold, bringing net income down. So let's do that. We're going to say save and close. And once again, I have the email marked, so I'm going to close this email and say save and close and yes, and see if it does what we believe it should. Go into the balance sheet. We believe that accounts receivable should be going up, so I'm going to double click on the receivable, and here's that item, Music Stuff Store. Double clicking on that. Here's our invoice. Went up by the 777 points, well, it went up by the 816.27. Closing this out, closing this out. We think that revenue should go up. It's going to be on the profit or loss and the income statement, same statement. We have the merchandise inventory, double clicking on that. We see this item here, 777.4, double clicking on it, noting that it went up by the sales price, not the sales price plus the sales tax. Closing this back out. That means we need the difference somewhere. Going back to the balance sheet, looking through the liabilities, we will see a liability of sales tax payable. That should include the difference. Double clicking on the 123.37, we see that 38.87. Double clicking on that item, we see that that's the sales tax. That's the difference in our sales part of the journal entry. Closing these back out. Then we have the reduction in inventory. The reduction in inventory being an asset. Scrolling up to the asset section, inventory asset here. Double clicking on that. We see that the Music Stuff Store asset going down. There it is there. We don't see the amount anywhere on the invoice, but QuickBooks knows what it is, how, through the list, through the item list when we created the inventory item. Closing this back out. The other side of this is on the income statement under cost of goods sold or the profit and loss in our open item window. Double clicking on the cost of goods sold expense. We see this last piece, the $598. Double clicking on that. Back to our invoice. Once again, we don't see the $598 on the invoice, but the invoice has generated it based on this item and us setting up that item as we've done in a prior presentation. Closing that back out. We see it there. We see the net effect then, an increase in the revenue, an increase in the cost of goods sold, the difference being the net effect on net income. Also note, of course, that the accounts receivable aging report will be affected. The accounts receivable by who owes us money will be affected from this, as well as the inventory being decreased when we look at inventory reports going down due to this transaction.